Let's look at Apple. The options traders, according to Reuters, are betting on something big after hours. For Reuters, it could be for Apple, it could be a swing of 7% up or down, and that would be a very big post-market move for Apple. Right, well, we're back for the final word with our featured guest, Jim Doak of Megantic Asset Management. Now, Jim, from what you can figure out here, a lot of the US hedgies have gone long Apple, but short RIM. Can you walk us through that? And I think you have a slide that you're going to show us with a sample trade.
We're trying to figure out the leading bear, and it seems to be the US hedge funds have a position on. And it's been rising since RIM stock began to rise last September, which makes this a unique. I've never seen this happen before.
Short interest goes up as the stock goes up.
That's right. So we have December 31st numbers showing, I think, 147 million shares. RIM's float is probably free float. In other words, total shares outstanding less the blocks that are tied up of about 400 million.
Wow,
so there's another 20 million shares short in Canada, so we have maybe close to 160 million shares
almost
short.
Half the stock sold short.
And I want to make the point with slide one to the viewers that hedge funds work on margin. They work on capital, usually borrowed money. In Canada, it's borrowed at the overnight rate plus some beeps. This is a margin-intensive trade because a long in Apple doesn't offset a short in BlackBerry. So if we have slide one up, you can see that you start the trade maybe when Apple's $700 a share and RIM was $10 a share. It requires a lot of margin, $200,000 of margin for $100,000 each side of the trade.
That would be an ugly trade. I mean, Apple is now $500 and change, and RIM obviously almost $20 of it.
And you lose for every dollar you lose on paper, you're losing $1 of margin. Hedge funds run on margin. They need the margin to buy other stocks. The markets overall are rising. This is an excruciatingly painful trade because it's pulling margin away that you could be buying and selling other shares with.
These are US hedge funds in the main?
That's correct.
Jim, you have another chart to show us, and this indicates how this trade has worked out and how painful it's been.
Yeah. Let's
put that one up.
It's margin intensive. For if you're losing $1 on paper, you're also losing the same amount of margin. Your margin is required for the trade has gone from $200,000 to $300,000 while you've lost $100,000. So let's step back for a moment. I'm not going to try and dazzle you, Andy, with talk of operating systems or whatever. But this is a unique situation. There is a short squeeze going to occur in this stock. It is occurring, I think, with some of the volumes. The stock's trade over 50 million shares
today. Volume, yeah.
And whatever the fundamental value of RIM is, let's say it's $25 a share. This could add another $5 to $10 a share upside to RIM. I own a lot of RIM stock. I've gotten some of this information from Warren Irwin at Rosso Asset Management. He's very smart. He's got a big RIM position. We're all trying to puzzle it out what the basis of it is. It appears to be a long Apple short RIM trade in the United States.
To explain this strange situation, with the short interest is rising as the stock rises, normally you'd expect the shorts to bail in a situation like that.
And as your viewers know, if you buy a $10 stock, you can lose $10. If you short a $10 stock, you can lose an infinite amount. That stock can keep rising as RIM shows every sign of doing. Let's talk about the stock pattern. It's come up in 3 surges, leveled off. It's leveled off now in the 17 and a half.
Well, let's have a 1-year chart maybe for RIM. Is that reflected? Okay.
This stock doesn't go down. This is a very, very bullish, what's happening with RIM stock. Like, it doesn't go up and then retrace 50% of the rise. It doesn't go up and level off and come down 20%. It goes up, pauses, and it keeps going up.
I have a couple of RIM shares, but my acquisition cost is 30, so I'm still well underwater.
There's a 3-for-1 split. That's what I put on the chart.
RIM shareholders, Fairfax Financial bought a bunch. They've got to be happy.
They're very smart. Prem Watson, this is a very smart trade. And, we're talking about trading. We're talking about short term. But let's say the BlackBerry 10 is a great product. It appears, by all accounts, to be. This stock will continue to rise the rest of this year. I think an important point to underline, and I think a Dominion Securities report of today's date shows this, the overall smartphone market around the world is going up, they estimate, by 27% this year.
There's a bigger pie for everybody here, potentially.
That's correct. And if you focus just on market share between Apple and Samsung, you're losing the fact that the overall market is growing very, very substantially.
And, of course, RIM, very popular with telecom carriers in developing countries because it puts less stress on their network, less data capacity is needed.
That's correct.
So where will this work out? I mean, this short squeeze, what happens in a massive short squeeze like this?
Well, it erodes your confidence if you're short. Let's put ourselves in the shoes of the hedge fund manager. First of all, every time someone pulls out a BlackBerry in a restaurant, you have a sharp pain in your wallet.
Right, okay.
Secondly, you have this bravado, well, I'm right fundamentally, and the stock will go down next week or the week after, or the launch will be unsuccessful. But as the positive news keeps coming in, as it is right now for RIM, we've heard from potential customers, we hear the carriers are stocking a lot of phones, pre-orders are very good. The launch, this new CEO of RIM appears to be top-notch, very organized. The launch next week will be outstanding. You're thinking about it constantly, 24/7, you're thinking about RIM, you're thinking about your performance numbers, your competitors are doing well in the first quarter, the overall world markets, Canada and the US are up substantially, and this position is pulling you right back. It's like a ball and chain around your anchor. You give up. You cannot take the psychic pain, and at a moment in time, you'll cover your short. And as that happens, and let's face it, all these people will do that at the same time, they all talk to each other.
That's further buying pressure for the stock.
That's correct.
So obviously, I wonder if Apple comes out with really bad numbers or outlook at around 4:30 this afternoon, that'll add further pain to this trade.
Yes.
Could that be the catalyst to get people to start covering the RIM short?
I think it'll be the catalyst either today with Apple's numbers or next week with the launch.
There's a lot of drama here, yeah. What price would you sell your RIM stock, Jim? Could you give us a rough idea?
Well, you're being very kind, Andy, not to remind me that I recommended it first at $17 a share about a year ago. I was early as usual.
It went down to 6.
Well, but I met in a bar last week, I met 4 people, all of whom made the low trade, buying at $6.05.
Oh, I know, it's amazing. Yeah, it's like, yeah, that's
I'm
right.
not going to tell you I was one of them. I think mid-20s, and then with a short squeeze, you could be in the mid-30s.
We'll be watching closely. Jim, thanks for framing that for us. It's a fascinating piece of analysis.
Thank you, Andy.
We are out of time. Michael Hainsworth is up next with the close. Thanks for